Cryptotrader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
Market cap at under $500 billion. The state of Wyoming defines a legal framework for utility tokens. Circle, a Goldman Sachs-backed company, buys Polonius for $400 million. Litecoin takes a hit after plans to launch LitePay debit cards are stalled by the banks. Israeli regulators rule that their banks can't deny banking to crypto exchange clients. And tonight we put the Chartists to the test in a brand new Cryptotrader segment. Good evening, it's Thursday night and you're watching Cryptotrader, the world's biggest cryptocurrency investment show. This week, the biggest news of the week must be the acquisition of Polonius by the Goldman Sachs-backed company Circle for $400 million. Circle is an over-the-counter dealer and they were rumored to have paid $400 million for Polonius. While $400 million sounds like a lot of money, if you consider that Polonius does $250 million in average trading volume, times that by an average 0.2 commission, and you get an annual revenue number of 200 million, which means that Circle paid a revenue multiple of just 2 for Polonius. Now, Polonius isn't the best exchange. Their customer service tickets sometimes take 6 months to be resolved. It seems like a small business or a big business being run by small business people. I suspect that Circle have a big plan for Polonius. In other big news, Litecoin took a hit this week when plans to launch the LitePay debit card were stalled indefinitely because of resistance from the traditional banks. It should come as no surprise that the traditional banks are doing whatever they can to make sure that they don't get disrupted by the blockchain, which is the biggest disruptor of our time. On the other side of the world, in Israel though, the courts ruled earlier this week that the banks cannot refuse services to crypto-backed companies. They had no legal basis to do this. Now, why this is so exciting is because this case will probably be a landmark for other crypto regulators. Those are the big stories this week, but I want to put the big stories behind us and to have a whole lot of fun this week. If you've been following my Twitter, you know I've been less than kind to the Chartists, the technical analysts, the guys that take historical prices, plot them on a graph, draw fancy lines, and then use that to guess or predict future prices. In fact, in one of my tweets this week where I laid out a crypto hierarchy, I put Satoshi on top and I put the Chartists number 3 from the bottom, just above the scammers and the Twitter trolls. So as you can imagine, I've been getting a whole lot of flack for this. So tonight, I've decided to dedicate an entire show to the Chartists, the guys that look at charts all day long, draw fancy lines, and decide whether the pattern is a head and shoulders, a dead cat bounce, or a wedge. On a serious note, I've lined up 5 of the top Chartists in crypto to give us their views of what we can expect on the markets. And who better to start off with than Tone Vace, the granddaddy of Bitcoin charting. Tone hosts a daily Bitcoin charting show on YouTube and has over 120,000 followers on Twitter. Tone, let me guess, you're not going to be talking about any type of altcoin today, it's going to be Bitcoin.
Of course.
Tone, what are we looking at in this chart?
Yeah, so this is a candlestick chart, basically focusing on the period of November into today, and it highlights the quick and unreasonable rise from 7,500 all the way to 20,000, and then the busting of what in hindsight looks to be a classic bubble from 20,000 reaching a low of 6,000 in early February, and we are now trending back up, but we're running into mountains of resistance between the 50-day moving average, the Fibonacci retracements, the trend line of 2 prior highs, one of which I label as a bull trap, and that's a classic point where a lot of traders get caught, and including myself. I was very optimistic at that point when Bitcoin was rising back towards 20,000, when it hit 17,500 around first week of January. But now this resistance is starting to mount once again as we try to go back to the upside from the $6,000 low. I'm looking at about 5 to 6 points of resistance in this area. And if we can't break above 11,500 fairly soon, sometime in March, then there could be significant downside for Bitcoin.
Tone, if I look at the graph, you have a solid blue line that goes from the all-time high all the way down. Are you looking for Bitcoin to break that solid blue line?
Well, that's the thing. I don't know. I'm looking at that line. I am hoping that Bitcoin would break through it because I'm a Bitcoin holder, but I can't assume that it's going to happen. The way trading works is if that line is broken, then you feel confidence in your bullish trades. But so far, twice in February, this line has rejected the price of Bitcoin, sending it significantly lower.
Tone, so what you're describing here is quite a bearish pattern. You're talking about a line that starts at the last all-time high, slopes all the way down in a declining manner, and you're saying that Bitcoin can't break that line. That sounds like a bearish pattern.
Yes, that is true. Now, there are plenty of bullish signs that are making people optimistic right now that the line is going to be broken. But you can't assume that it will be broken, and until it does, you have to be at best neutral right now on the price of Bitcoin. But an argument at this point in time, an argument by a technical trader could be made at one point or another. I am staying very neutral right now for the next week or so and see what develops.
Now, Tone, if you weren't holding any Bitcoin, would you use this as a buying opportunity?
No, not at the moment. I would wait for the price of Bitcoin to close above 11,500 on a daily basis in order to consider it a good buying opportunity.
And why is that? Why should I wait for 11,500 when I can buy cheaper now? Shouldn't you buy now when the price is lower than lose at 10%?
It's okay. I'm more than happy as a trader to miss a potential 10% gain if it comes at a risk of losing 50% of my portfolio. I'd rather be a little late on a trade, but have 90% confidence that this is a good trade that will immediately start making me money instead of guessing that the price will continue to go up.
So Tone Vase is saying, sit tight, wait for Bitcoin to pass the 11,500 and then fill your boots. Staying with Bitcoin charts, we now have Matti Greenspan from eToro on the line, and Matti has a very interesting theory. Matti, you look like you're standing next to a wedge, just like the one I have in my hand. This wedge keeps coming up. What is that chart?
So this is Bitcoin over the last year or so. And yes, the yellow lines is the wedge, but actually that's only the small part of this pattern. Bitcoin has been adhering to a very strict breakout pattern over the last year. And we can see the previous examples here, so 1, 2, and 3. So this is the $2,000, $3,000, and $5,000 respectively. And you can see that every time it breaks to a new all-time high, it comes down to test that previous all-time high as a support, and then test the new high, and then we get the breakout, and then we get some sort of a wedge. So you can see here a perfect wedge formation, right? And then you see the breakout to the new high, come to test the previous high, and then 8,000 was the last major breakout level that we've had. And as you can see, we've come down to test that, and we've even tested the lower support line of the wedge. And what we see next is hopefully to break above that upper line. So if we see 11K and holding, then that would be a good bullish indication for a price range of 20K or so.
Matti, so we keep hitting new all-time highs. Then we go back to test the old one. That's exactly what Bitcoin just did. With this in mind, where are you saying we'll be in a few weeks?
So past performance is never an indication of future results. But what we can say is that if we continue along the same pattern as before. So we'll probably see some sort of a consolidation. We see around 10K to 12K, 13K, which can last for a few weeks, possibly even a few months, until we see more FOMO and then testing the all-time high of 20K.
Matti, obviously I know that past performance is no indicator for future performance, but the whole reason why we use charts is to tell us what to buy or sell. So based on your chart, should we be buying or selling?
So based on this chart, it does look very bullish. And if we continue with the same pattern that happened the previous 3 times, then it will continue on. But of course, always make sure that you diversify your portfolio and never put all of your chips on one hand.
That's Matti Greenspan from eToro, and now we've seen 2 Chartists, and I still don't know whether I should be buying or selling Bitcoin. So I'm going to stay on Bitcoin just a little bit longer. Our next guest is Nick Cote, or PizPie as they call him, and he's our next Chartist in the battle of the Chartists. Nick is on Twitter with 50,000 followers, and he's a veteran in the charting game. Nick, you've chosen the Bitcoin USD chart, and I think I finally see a head and shoulders. Am I really seeing a head and shoulders?
There may be an inverted head and shoulders on that chart, but definitely not a head and shoulders right now.
Yes! I knew it was an inverted head and shoulders. I was spot on. Nick, on a more serious note, there are a lot of lines and colors on this chart. What is the chart actually saying?
Well, this is on the log graph right now. So what it's saying is these blue boxes are called order boxes or liquidity boxes. And this is where institutions put their orders. Generally, price is going to only have major reactions where the liquidity and people put their orders. So as you can see, I marked out my resistance levels and my support levels. And that's generally where you're going to see major inflection points in the price. So right now we're kind of just hovering in between, so it's not advisable to take trades in between there because your risk reward isn't maximized in between order blocks.
Nick, it certainly does look like we're trading in between channels, but if I look above and below, I see some blue boxes. What are those blue boxes?
Right, so there's a lot of people put their asks orders between 11.9 and 12.1K. So that's where people are looking to offload or potentially short the market, right? Because if you look to the left, there's a lot of price history there. And on the bottom side, between 8.7 and 9.1, that would be where the order block of the buy sides are. So if price were to come in there, that's obviously where you would expect to see a lot of support or resistance, depending if the price went north or south from here.
So what you're saying is if Bitcoin goes to 11,500 or 11,700, you'd be selling your Bitcoin and buying at around 9,500.
Well, between 11.9 and 12.1, I would take off 33% of my trade and let the rest run and see how price reacts. Most of the time, about 70 to 80% of the time, when you see price coming into these large horizontal levels, it's not going to break it. So a lot of people, they will be emotional and take bets ahead of the time and thinking that price is going to move above or below these levels, but probability says that it rarely happens. So it's better just to take profit at those levels because you don't want to be bag holding as the price retraces back to the throwback levels.
So Nick, I'm holding Bitcoin today. According to your graph, I'm in the middle of nowhere. On your thesis, should I be buying more, holding, or selling?
Well, it depends where you've already bought it. If you were trading as an institution, you're already long from around 9.1 to 9.2, and you're looking to hold it up until that 11.9, 12.1 mark. I don't advise taking a trade right here because, as I said, we're in the middle of an order block right now, and the volume is very low. So it's better just to maximize your risk rewards and wait and place orders in those blocks rather than trying to scalp an intraday move.
Nick, what happens if Bitcoin goes up and breaks through that 11,500? Is that what you call a breakout?
Not just yet. Like I said, the logmatic resistance is around 11.7, 11.9. So you'd basically be buying right at resistance with the anticipation that it was going to break. And as I mentioned before, probability-wise, that doesn't happen often. But if you saw a move above 12.1K, that'd be a confirmation that we'd be seeing a new bull rally up to that next level around 14.1, 14.2K, and possibly up to 16,000. Again, we need to see a volume profile breakout, and right now in the market, there's just not a lot of volume happening. On that note, the OTC volume is at record highs right now, and that's mostly in part because we're seeing really strong fundamentals from regulations and governments coming out, and also at the network level, Bitcoin is clearing the low-cost transactions at around 5 to 10 cents right now.
So, Nick, in general, you sound like you're a big Bitcoin bull, but you're not buying or selling anything at this point. I'm going to do one more Bitcoin chart. Ched's Trading, or Big Cheds on Twitter, has 50,000 followers, but he's asked us to remain anonymous and not for the usual reasons. Big Cheds has cancer. He was diagnosed with cancer in September last year, and he's currently having his chemotherapy treatments. He's actually having his chemotherapy treatments today, and despite this, he's insisted that he'll be well enough to join us on the show. Cheds, I know this must be a terrible time for you to take a call, and we're really grateful. We're all behind you, and we wish you a speedy recovery. You've sent me a Bitcoin chart with a reverse head and shoulders. What are we actually looking at here?
Well, first of all, I want to say thank you for having me, Cryptomanran. It's a pleasure. And I think what's interesting is if you look back about on February 15th, right after we broke out of the inverse head and shoulders on the 4-hour chart, I said, ideally, we're going to form an inverse head and shoulders on the daily chart. And I think it looks like we're kind of doing that now. It looks like we're almost done forming the right shoulder on that inverse head and shoulders. And we're kind of at a critical point right now on the daily chart where we're testing both the downtrend line, the macro trend, the bigger trend, the downtrend line, and potentially the neckline on the inverse head and shoulders.
So, Cheds, what happens if we break below the 10,600 level, the downwind trend levels? What happens then?
Well, first of all, if we break that 10.6, 10.7, our next hurdle is that neckline on the head and shoulders, 11.26 level, 236. From there, I don't like to kind of predict where we might go next. Based on my style, I like to wait, watch the volume, and really watch the candlesticks and kind of see where we're going to go. But you look for some kind of obvious resistance or a traffic, level where there's been a lot of previous resistance, and that's going to be, in that, high 2, low 13 level. So you could, conceivably, if we do break that neckline, conceivably we could see some churn, some consolidation in the 13 to 14 level. That potentially would come next, in my opinion.
So, Cheds, today, $10,500 per Bitcoin. Should we be buying, selling, or holding?
Really that depends on your style. I know there's a lot of different trading styles. I have a good friend of mine, and he has 2 scenarios right now. He would be buying on a break of the neckline of inverse head and shoulders. And essentially, that would be a bullish confirmation. His other scenario, it's essentially a value scenario. You'd be looking potentially for a retest of that lower trend line support on what you called the wedge, right in that lower trend line support. So let's say we were rejected here. If you're a value trader, you might be looking for an entry, back down in the high 7s or low 8s.
Cheds, at what point in this graph are you saying that you have to buy BTC, that it's so cheap that we have to buy it?
Based on my scenario, what I'd be looking for is a close on the daily chart above that neckline level.
Cheds, thank you very much for your input. We know today has been a hard day for you. We know you're going through chemotherapy today. On behalf of the entire crypto Twitter community, thank you, and we wish you a very, very speedy recovery. Let's move away from Bitcoin for a while. Our next chartist has a really interesting charting idea. Cryptotrader, you've chosen to remain anonymous. We can say, though, that you're one of the biggest chartists on Twitter. You've chosen the Omisego OMG versus Bitcoin graph. In other words, the Omisego price, but not denominated in US dollars, rather denominated in Satoshis or Bitcoin. And if I look at this chart, what I think you're saying is that Omisego is going to be going up in value.
Exactly. We can see here a bullish ascending triangle pattern, okay, which is a well-known pattern. And also what I like from this chart is how the pressure of the volume is responding to its new uptrend, because we can see how since middle of December, more or less, the bulls takes the control of the price, and the price starts to grow, and it starts to define a new main uptrend. But we can see also how at the half of February, more or less, the price started to speak up again and defining a new uptrend support.
Okay, you've shown a little white box, a pattern called a bull ascending triangle. And in this figure, it looks like it's a pattern when the bulls go in, the bears push them down, the bulls go back up, the bears push them back down again, and they carry on doing this until it crosses a line which you've put at 1800 Satoshis. What happens when we cross that 1800 line?
What we have until this time, it's a consolidation of the price during this more or less like a couple of months, 3 months. It's a battle between the bulls and bears. And when we cross that key level around, I just say 1,800, what we will have, it's a breakout of the trend line. And we have a spike on volume. And to here, for example, to calculate the objective target, what I did is to draw a Fibonacci retracement.
And what happens if it moves beyond the 1800 level? Where can we expect it?
The calculation here can be made through two different ways. The first one is like we can have a target objective in the same length that also was the initial wave opening the triangle. And also we can see here how also this matches perfectly with the Fibonacci retracement reaching the 161 level, which will be around 2,800 more or less.
Our last chartist tonight is really one of my favorite people in this space, and you're about to find out why. Kunal Desai, Kunal00 on Twitter, you've chosen the only token that Vice Ratings has given an A rating to. It's one of my favorite tokens, and in a few weeks we're going to be running a show on it. You've chosen Neo. Now I'm looking at this graph, I see a whole lot of colorful lines, and I see the wedge. What am I looking at here?
So there's a couple things. So, on a technical level, pretty much every single of the major coins is showing the same pattern as Bitcoin, right? It had a big peak and you've been coming down for months into essentially a trend line that's happening right now. Now, what I like about Neo that's a little bit different than Bitcoin or the charts of Ethereum is that Neo, number one, has intense volatility. But the second part about Neo that I love is that this one has already broken. See, Bitcoin and Ethereum right now are right under some key technical levels. So they're still trapped under that resistance point.
Kunal, I'm looking at the wedge that you've drawn on the graph, and you can see that Neo is broken out of the 130 US dollar range. Is that the breakout that you're referring to?
That is the exact breakout that I've referred to. And we ran about 145 yesterday, but we're starting to pull back and retest that breakout spot.
Kunal, what about the green line at the $144 price point?
The green line is just the previous high that it's been at just of the last, few days. If it starts to break out back over that line, what you're going to start to see is some continued momentum. You'll have a higher high.
Cool. So we've broken through the green wedge. Where can we expect it to go right now?
I think over the next few weeks, as long as we can sustain the movement in the cryptocurrency market, we could see easily 150, 160 very quickly.
So Neo seems to be the hottest coin right now, according to you, to me, and to Vice Ratings. You're saying buy it now at about $130 and hold it to the moon.
Hold on tight and enjoy the ride. If you're like an aggressive trader like I am, your risk would be down to say 115. So give yourself 15 points of a risk on this to get this thing back into the 160s, 170s. If you're a longer term holder and you're somebody that's into an investment type of philosophy, then I think somewhere around that 100 mark will be really the kind of floor on Neo.
Kunal, I'm having so much fun. You're having so much fun. Let's look at a second graph you sent me. You sent me the graph for Ethereum. And I'm looking at this graph, and all I see is more colorful lines. What should I be looking at here?
So Ethereum is showing a very similar pattern to almost every single one of the major coins. But the one thing with Ethereum that's happening right now is a very, very tight coiling pattern from the last month. So when you're thinking about trading and trading tactics, coins, they get their power from tight ranges, consolidations, and bases. And so what happens when the range contracts? It's called range compression. Essentially what you're doing is building up steam. So when you think of trading, you want to think of levels as like a pressure cooker. And so what happens is, every time you test a level, you're building up pressure in that pressure cooker. So when you finally break over it, that's when all the steam comes out and you get those runs. So what you're seeing with Ethereum over the last few months, that big green line that you're seeing right on the top is your downtrend line. So what you see here is you have tested that level now 4 times. But in the last 1 month, we've really been in a tight range. Those last 2 weeks, you're seeing it just kind of run between 800 and 900 back and forth, really building up that pressure. And so I think the next time we test that trend line, that's going to be the 5th test. And we should really get a nice explosion. We could get a run to 1,000 where, if you break over 1,000, then things really, really get interesting. That's going to be a technical level, but an important psychological level, which, as you know, in coins is really the name of the game.
Okay, got that. Now, what happens if we break under the 800 line?
So that 800 level is where I am basing my risk, and it's the bottom of that basing pattern. So if we get under that level, I think we could drop really quickly to 700, maybe even 600. So we want to really hold into that 8s if we can.
And if we break through the top wedge, what's the next stop?
Our next level of resistance would be at 1,000, which is going to be a pretty hefty level. We may have to do some consolidating when we get around that level, but if we can rest even for a handful of days to a week, we'll start building up that pressure again. Remember that these coins, they get their power from consolidation, from those resting periods. And so as soon as we break, if we can hold and even rest for a few days, then you'll start to see that move over 1,000.
Kunal, you've shown us 2 very interesting charts. You say that both Neo and Ethereum are going to go up. But if you had to choose one, only one that you could invest in, where would you put your money?
I'm going with Neo for the simple reason that Neo has already broken out. So Neo doesn't have any work to do. See, with Ethereum and even Bitcoin itself, right, there's work to do. It's stuck under resistance levels. It's coming out of range, but it hasn't done it yet. The thing that I love about Neo is it's in the moment right now. It's made its move, and now it's just got to go do what it's going to do.
That's all we have time for here tonight. I've certainly had a lot of fun, and the truth is I've learned a whole lot. Kitty's still dead. She won't bounce. And I'm about to eat the wedge. We'll be back next week with more trading ideas in this flat crypto market. Until then, I'll be on Twitter @Cryptomanran. Until next week, my friends, trade well.